Market news now. Asian markets struggled to gauge the mixed messages coming out of the US-China trade negotiations, with only Japan making positive gains on the day. The Japanese market closed in positive territory. The Nikkei share average ended the day up 0.22% at 23,304 points. Hong Kong, which is formally in recession after months of protest action in that city, saw its main bourse close nearly flat. The Hang Seng Index ended the day up a slight 0.02%, 27,688. On mainland China, the equities markets were less positive, it seems. The Shanghai Composite Index declining by 0.43% at 2,978 points. Let's go to Wall Street now, where last night Wall Street's main indices firmed on hopes of a deal being firmed up in the so-called phase one of US-China trade negotiations. The Dow Jones Industrial Average ended the day up 0.11% at 27,493. The S&P 500 was the laggard on the day, sliding 0.12% at 3,074 points, while the tech-heavy Nasdaq closed up 0.5% at 8,433 points. Let's take a look at what else is happening in the markets. Right, so let's get more on the markets. We're going to cross to Michael Tran, who's standing by at the Johannesburg Stock Exchange. Thanks so much for your time this afternoon, Michael. Let's start with this US-China trade deal that many people seem to have a sense of optimism about. What's the latest there?
Yes, Nzinga, it's leading to record high numbers in the US. As you're saying, Dow Jones and Nasdaq both closing in record high territory last night. S&P 500 almost at that level. And that's all on the basis that it looks like phase one of the trade deal is going to be signed in the next month. On the US side, they say the only question to ask is where will they sign the trade deal? Which US state will have the privilege of having the signing ceremony? In general, if US and China are playing nice, it means that traders are expecting higher economic growth, more certainty, and when you in those positive moods, people are buying stocks and pushing prices higher.
On the US front, what's happening in the Asian markets around that also positive sentiment?
Yeah, so Asia taking a lead from the US overnight, also looking positive. As you said, the only bleak spot at the moment is in Hong Kong, where protesters have led to a big drop in tourism, and that has led to a recession in Hong Kong. So that's not great for that region. But in general, Asia looking good. Asia and China obviously will also benefit if there is a trade truce between the US and China. It's particularly phase one, let's get that under wraps, and then they can go into the new year focusing on trying to settle down phase two of the trade deal. All in all, let's hope that before the US election at the end of next year, something solid can be in place, and we can focus on the next hurdle instead of fighting about this for the last 2 years.
So a country that does need some positive sentiment and some upping is South Africa. We saw that special economic zone being launched yesterday, along with partners like Ford and the United States. The South Africa Investment Conference also kicking off officially today with President Cyril Ramaphosa. How is the market reacting, if in any way, to those two events?
Yeah, I think the reactions have been fairly muted at the moment. The market's used to having quite grand plans being announced. I think the main thing that investors are looking for at the moment is how will this translate into economic data, and how much of these the plans announced will be implemented. The president earlier today saying that the target is to get South Africa into the top 50 in terms of business competitiveness. That means opening up our borders, making it easier to get visas, making it easier to start businesses. If that is implemented, it means that economic growth should grow, and as a result, you then should see the JSE All Share grow. At the moment, though, it's green on the screen behind me, and that's mostly because global optimism around the trade deal we were speaking about earlier. Unfortunately, South Africa, given our size, we generally are blown by the wind of global sentiment, and that seems to be the case today as well.
Okay, so the rand opening at around 14.75 today. What's it doing now? And is that also affected by mostly those global winds that you're talking about?
Yeah, very much so. And on days where you see what you would call risk on, you generally see the rand strengthen a bit. At the moment, the market's sort of just bobbing around, going sideways. JSE All Share up 0.8% today, though, so that's good news. But in general, we're waiting for the next piece of news out of China, what's happening on that front. The other big political thing that the market's been watching for this year is Brexit. That's now been put on the back burner. UK elections on the 12th of December. So depending on how the polls go leading into the elections in early December, you'll also see the rand pound shifting a bit. And anything with exposure to the UK, you'll see those share prices changing as well.
Okay, Michael, I know you were saying the board is mostly green behind you. We're seeing Goldfields down 4.85%. Do we know why that's happening?
Yeah, so you'll see it's the year-to-date number behind me is up around 80%, so it has come off quite a big high. But in general, gold slightly down today, also the rand being flat. And the main reason for that is there's just more optimism in the market at the moment. Higher optimism generally leads to a slightly lower gold price. And the gold mining company, their share prices are very, very sensitive to what the gold price is doing. So it just seems to be a case of a slightly lower gold price pushing through to mining company stock.
Okay, and then with company news, what's happening with N2?
Yeah, so N2 is one of the bigger listed REITs on South Africa, so a retail company, or I should say property company. Their operations are 90% in the UK. They own shopping malls there, and then they have 9% of their shopping mall, or 9% of their portfolio in Spanish shopping malls. Company saying that Brexit fears have led to lower increases or actually a decrease in some of their rents, which has not been good for the company. Their debt levels are now too high, they're unsustainable, and as a result, either they're going to have to ask shareholders for more money, or they're going to have to sell some of their properties to bring down the debt levels. The result is the stock's down 15% today, and it just shows you the danger of when the companies get over leveraged, particularly in non-growth situations. So you would probably argue that if Brexit hadn't happened, the company would be doing fine. But as it stands at the moment, Brexit's been a bit of a turmoil in terms of UK GDP growth, and as a result, they're not seeing the rentals from their property portfolio coming through, and shareholders are paying the price at the moment.
Michael, we're midweek. What are we going to be looking forward to for the rest of the week in terms of what's going to be moving markets?
Yeah, so it's US earnings seasons at the moment. Still a few big names coming through this week, so depending if those beat or miss, you'll see the market reaction from there. On the local front, we've got Richemont. They're the luxury goods retailer. They're coming through at the end of the week. Be interesting to hear their chairman's comments about a recent tie-up with Alibaba. So Alibaba is the Chinese-based internet company, and they're trying to team up with Alibaba to try to sell some of their high-end luxury goods through online retail in China. It'll be interesting to hear what their forecasts are around what that partnership looks like and how the stock price will react from there.
Michael Tran from Investec, thanks so much for your time this afternoon. It's time for a short break.